Well, let's go across and see what happened at the NASSCOM Tech and Leadership Forum. Well, on the sidelines, my colleague Anurag Joshi caught up with Amit Chadha, who's the CEO and MD of L&T Tech. Let's go across and listen in to what he had to say about the company's plans for expansion, the deal pipeline, and more.
If you look at the world today, right, the ER&D space is supposed to grow from the current $1.82 trillion to about $3 trillion in the next few years. Now, our goal is twofold. Number one is we want to grow faster than industry. If you look at various reports in the last few years, we have grown faster than industry. So we want to maintain that. So if I take that trajectory and I look at the ambition that the board has for us and the group has for us, we would actually like to be $3 billion with about 18% EBIT in the medium term, and then build a platform to get to about $5 billion in the longer term.
Right.
How will this happen? Three things. One, we've restructured the company and now we run as three segments: mobility, sustainability, and tech. And we believe that there's enough room for each of these segments, which are approximately about $400 million each, to get to $1 billion each in the medium term. We also believe that there are some tailwinds coming out in the ER&D space that should help us.
Right. You recently closed an $80 million deal, and that tops, deal wins in the last quarter. So what role will LTTS play, in the $80 million digital transformation with the US manufacturer? Could you throw more light?
Sure. So as again, if I was to give you a slightly longer answer, see, we've been looking at the market and we've realized that we can't do things centrally. So we've been running proactive deal campaigns, transformation campaigns with our customers. There are deals that we have bubbled and closed that are less than $50 million, and those are run by the segments. And then there are deals above $50 million that range from, in fact, we have got more than a $200 million one running as well at this stage. And then there are 100 million deals, and there are 50 million plus deals running at this stage in the pipeline.
And you're confident about the momentum of deal wins in the coming quarters?
We are. So if I may, the pipeline is a lot better than it was a quarter ago, same time last year. We continue to work, and we've got a very mobilized and enthusiastic team. We've created a central deal engine that's actually headquartered in Dallas, Texas. And then we have segment deal engines that each segment runs. So we're fairly comfortable at the stage that we had a marquee quarter last quarter with the number of deal wins. And I do believe that quarter four will be similar. And we hope to keep the momentum as we go forward.
Right. Your outlook on FY26 in terms of the client spending?
So outlook, I do believe that in the industrial sector, I do believe that our clients are becoming a little more sure-footed. Oil and gas, CPG, a lot more sure-footed. High-tech, a lot more sure-footed. Medical is conservative but sure-footed. The only clouds that we see is in automotive, and I believe that that's an H1 FY26 play, should clear after that. So I do believe that FY26 should be better than FY25.
Right. Now, your recent acquisition of IntelliSwift in November, how has that enhanced LTTS digital and your AI capabilities? And particularly, how has that boosted your engagement with hyperscalers?
So Intelli, actually, we announced it in November and we closed it, I think, on 2nd or 3rd of January. So quarter four, we are running as one integrated shop. It comes with about 1,500 bright engineers, all software engineers. It gives us two things. Number one, Intelli already was working for 3 of the hyperscalers that we work with as well. And with the A+B model now, all these 3 hyperscalers will be 25 million plus accounts for the company annualized.
Right.
Second, Intelli does about $50 million of revenue in healthcare, fintech, and retail. And these are 3 areas which are in the service-led engineering world. And if you look at, we were not playing in that space. So it allows us to be able to grow in that space. And I believe that when we get to $3 billion, Each of these three should be 100 million sub-vertical for us as we move forward. So it gives us one, increased capabilities or increased penetration in the hyperscalers. Second, three new sub-verticals. And third, of course, software capabilities, pure software capabilities that we did not have to that level in the past.
Right. And on SLMs, now how are you investing in AI in SLMs? I mean, what are the kind of investments? What's your capital commitment there?
So we continue to invest between 1.5% to 2% of our revenues in technology every year. In the last 12 months, we actually announced to the market in H1, if you recall, our margins were slightly lower than H1 of the previous year because we had said that we will invest in technology. So we actually built up compute power. We dabbled in new use cases. We brought on board AI for automotive, AI for sustainability, AI for medtech and high tech. And therefore, if you look at Q3, our margins operationally had drastically improved.
All right, that was Amit Chadha, CEO and MD of L&T Tech, weighing in on the company's growth roadmap ahead. But with that, it's a wrap on this edition of Market Fatafat. I will take your leave. Thank you so much for tuning in. Don't go anywhere because market action continues on ET Now.